So we've made it another week, right?
More than made it another week. We've got good news.
We have good news this morning. I'm so excited about this Tuesday talk for many reasons. Because we have a special guest and because we actually watched the governor's speech yesterday and have really good information to report.
Yeah, and I'm sure you guys have already, well, hopefully you've already seen on Facebook. We announced it and maybe even watched it yesterday. But it might be news to some because I did get a couple text messages this morning from people going, can we show soon? And so I'm like, yay, yes.
So stay-at-home order is going to be lifted on the evening of April 26th, and we have permission to start doing in-person showings as of Monday, April 27th. So no open houses. We're still not allowed to do that. Per the Safe at Home is the second installment of the Stay at Home. So Stay at Home gets lifted. We now get to do in-person showings as of Monday. So that's great news.
Yeah. We just felt a weight lifted off of us yesterday because, I mean, amazingly, you guys are still selling houses.
Yeah,
you guys adapted quickly, really quickly to how do we sell houses, get people to see homes without going in and actually closing deals. We'll show you the stats and what's going on. But luckily now we can get buyers into the homes. And again, it's still, be safe, stay at home, wear your masks, let's be respectful so that we don't get pulled back again.
Yeah, they're not lifting all restrictions. They're still wanting us to stay at home as much as we possibly can, but they're at least giving us the flexibility to get the buyers in the homes, which are going to allow us to put more listings on the market, do our virtual open houses. We'll be able to introduce those back. So that's just really
good
exciting.
News. The office. So Paul, you get to go to the office next week. So we're not going to have classes. We're not supposed to have classes and gatherings.
Nope, we still can't have groups of more than 10. So we're going to minimize that. Are we actually opening the office for agents to come in?
Yep,
okay.
The office will be open.
So you can get your signs and lock boxes and try not to come
they
in
say
and
keep
congregate.
Less than 50% occupancy. We never have that many people in the office unless we're doing a class. So we will not have classes, no sales meetings as of yet. We'll keep doing live stuff like we're doing right now. But yes, the office will be open. Paul will be interviewing again, handing out, like Stacy said, lock boxes, signs like that with the distancing.
Yes, social distancing. So anyways, continue to keep those social distancing parameters in place. Again, we don't want to use and abuse the privilege of being able to get partially back to work.
Yeah, exactly. So for those of you who just joined in, over here, we've got Amir Razi, who's the president of Own Home Loans. We're going to get to him in a second here, and he's going to kind of tell us what's going on in the finance world, the lending world.
A lot of things are changing.
A lot of things are changing. But I want to let you guys know who just signed on. Who's this guy over here to the left?
Exactly.
So before we let Amir speak, and we want questions from you guys too for Amir. So go ahead and start putting questions out there, and he'll get to those after his pre-planned presentation. But first, let's talk about what's happening in the market. Small pre-planned. What's happening in the market?
Yeah, wow. The numbers really, as we expected, dipped. When we were not able to get buyers inside homes and we couldn't do our virtual tours anymore, and really even listing agents and buyers agents weren't allowed to access properties, that had some negative repercussions. I'm excited to see what next week holds because we're going to be back into the swing of things. New listings were down 58% compared to this time last year. We had 1,000 new listings hit the market last week. There were almost 2,400 that hit the market last year during that same week. So that was to be expected.
There are still 1,000 in 1 week.
Yeah. And we've been getting text messages. I love you guys sharing your success stories. There are 3 or 4 of you that got buyers under contract, home sight unseen. And the first time they'll see those properties is during the home inspection. Yeah. So you're still making it happen. Pendings were down 56%. So 800 units went under contract last week, compared to almost 2,000 last year.
That's a 50% dip.
Understandable. So closed transactions still looked really good. There were 1,000 closed transactions last week compared to 1,300 the previous year. So only a 25% decrease. Not too bad. Showings, as you could expect, were down 93% compared to the same time last year. That's because we can't get inside. So
Yeah.
93% decrease. What was interesting though is I actually tracked the statistics from last year. Showings after we got to April 15th, they were on an upswing up until April 15th, tax day. And the weekend following April 15th, tax day, they were down 25% last year.
Oh, wow.
So just kind of an interesting statistic for you guys to know that when you come out of the tax week, expect that weekend to be a bit of a dip. So yeah, they went down 25%. So those are your stats for this week.
So this should be really interesting for next week or 2 weeks from now.
Yeah.
When we open back up to see, do we have a flood of listings or not? It'd be interesting to see.
Are there a bunch of things that go under contract because buyers are like, oh, I've been ready, I've been waiting. So we'll keep you posted. But we'll have the charts and the graphs on this, my summary report out to you later today.
And then in office, the prior Tuesday, we let you guys know that there were 19 buyer contracts written. I can't track the listings under contract. It's not as easy. So usually that it's almost a 50-50. So if we had 19 buyers written, we might have had, 10 to 15 listings go under contract. But the buyers I do track easily. We had 19 written offers the prior week. And then this last week, we had another 19. So we still have had 38 written contracts for buyers in the last 2 weeks. Now that we can show floodgates, be ready, be prepared. We've been saying this for a while. So anyway, life is slowly
and cautiously,
like Polis said, this is a marathon.
Yep.
We've done the sprint. We did the sprint. Sprint's over. Now we're into the marathon. So hang on, keep doing what you guys are doing. You're awesome. Let's hear from Amir. Again, Amir, Own Home Loans, the president, our in-house company, my company as well, who's worked with many of you guys already. He's doing a fabulous job and getting through these trying times and, playing by new rules set every day. So
no, we thought our industry was changing rapidly. This is like every hour.
Yeah. All right, Amir, what you got for us?
Yeah, that's probably a good segue. I will say for those of you that had a contract, whether you're listing or buy side, before things got crazy, which I think was roughly, kind of mid-March, and have closed that successfully. Congratulations, because anyone who got into a contract pre-COVID and then had to close it as things were happening, I think those were some of the toughest deals, at least that I've seen in quite a while, because lenders were changing the landscape and changing the rules and then applying those new rules retroactively to loans that were already in the pipeline, which made things extra tricky for everybody. I think we're at the very tail end of that now, which is a great thing, to kind of have at least some more predictableness as to what's going on and what's going to happen. And I just wanted to kind of give you guys a quick overview, and you might already be familiar with a lot of these things, but some of the biggest changes really that can impact you as an agent, whether you're listing or buy side, are to appraisals, how they're done, to verifications of employment and re-verifications, and to rate locks, and just rates in general, because they're so volatile. But one thing I want to mention in regards to all of these rule changes is that lenders are still figuring out what's happening. So what one lender might be doing may be vastly different at another lending operation. And for us right now, because we have a lot of different investors to choose from, we're actually in a pretty happy place, because we've been adding some new investors that have some more flexibility. But it's good to find out, whether you're listing or you're helping a buyer, what the financing nuances are. And I first want to talk about appraisals, because if you are not working with a lender who is offering desktop only appraisals, or at the worst drive-by, you should try to figure out why that is, because Fannie Mae, Freddie Mac, FHA, and VA have all loosened up their restrictions as to appraisal requirements. So really, almost anything under 97% loan to value right now is really a desktop appraisal. If you don't see that, find out why. Ask your lender what's going on. Why can we not just do a desktop appraisal? Because for primary residence, that's really all that Fannie Mae and Freddie Mac are asking for now. And I'd love to get questions on appraisals, appraisal process, if you guys have any, so I can go into more detail. The other really big thing I want to talk about is verbal verifications of employment. A lot of you may have seen with recently closed transactions, your buyers or whoever getting a verification of employment the day of closing, which can be incredibly nerve-wracking, because if that phone call doesn't go well, that loan may not be closing. And I'd be curious if anyone has any stories to share about verifications of employment, because these are much trickier verification than maybe somebody who has a steady job. So if you're working with a buyer who is salaried, but in a weird industry, maybe they're in the airline or hotel business, find out if that's going to be an issue as far in advance as you can. If you're working with somebody who's self-employed, maybe who is commissioned, bonus, variable income, those are becoming and have become a lot trickier. So definitely ask questions, find out from your lender what's happening. If your buyers are good, ask those questions. Don't be afraid to find out what that process is before you get to the closing table. The last thing I want to mention, and I'm hoping I'll get lots of questions. If I don't, then I'll just start maybe spouting out some more details about this stuff, but we'll see how it goes. Last thing I want to mention is for those of you that are used to quoting monthly payments to your buyers, just be very careful when you're doing that, because each product now is a lot different. And when I say product, I'm talking about, if you have a conventional conforming loan versus an FHA versus a VA, maybe a VA jumbo, maybe what you thought was a jumbo loan that's no longer closing. The volatility is all over the place. So definitely make sure you're connecting with your loan officer before you are giving your buyer a false sense of what their monthly payment might be. Make sure you're in good coordination with whoever you're using for lending to set the expectations well for your buyer. So that's a quick snippet. I'd love questions if you guys have some. If you don't, I'll just start blabbering on about other stuff. But those are some of the most important changes that I've seen lately.
Awesome, Amir. Thank you so much. That's really helpful.
So we're looking at questions here before. I just wanted to give a shout out. Was it Pam? Let's see
Pam
here.
and Vance.
Yeah,
Yeah,
Pam
we
and
got to do a
Vance.
shout out.
Yeah, so they did a virtual tour on their listing. It went under contract, and then they had to have the inspection along with the showing. They did the inspection. They came and looked at the house for the first time, and they didn't walk. They're moving forward. So that worked. Writing up contracts, sight unseen, and then viewing the property.
Yeah, it's so great to hear that success.
That's exciting. Beth Goddard, Amir is the best. Awesome.
Yeah.
Thank you, Beth.
I know Beth's working with a buyer right now who's using Amir, and it's been going very, very nicely.
Thank you.
Let's see, Brandon, my friend wasn't able to close because the buyer lost their job 1 week before closing. Went back under contract yesterday, the power being priced to move. So that was a listing that Brandon had. And that shows that we have still an abundance of buyers.
Mm-hmm.
And there's a lot of, even though the buyers pool is going to go down because of some job insecurities, we had so much pent up demand that we can lose a percentage of that demand, and we're still getting multiple offers. Amir, you had told me
just
about...
to piggyback. Julie and I had a offer. I think we came in second place, but I think there were 14 offers. I don't know if Julie's on here, if she wants to confirm that, but from my understanding, it was 14 offers sight unseen. So
oh
very
my
encouraging.
gosh. I had not heard that. Wow.
So here's a great question for you, Amir. I'm going to kind of put a couple peoples together, Tanya Brown and Vicky. Are you seeing appraisals not coming in at value because appraisers are being more cautious with the desktop process? And Angie said she had one come in low. And on top of that, can you also do desktop appraisals for refis?
Yeah, so I'll just take that question and just kind of elaborate a little bit on it. As far as appraisals coming in low, I personally have not seen much of that, especially here in Colorado. I've talked to, I keep in touch with a lot of people in the lending industry. A lot of them are here in Colorado. I have not heard much of appraisals coming in under value. If that changes, I will definitely post some updates to Facebook. But from my sphere of people that I keep in touch with and what I've personally seen, I have not seen much of that. As far as desktop appraisals being available for refinances, yes, they are. Pretty much anything under 97% loan to value. We personally can do desktop appraisals. So to elaborate on that, we have 5 investors we can work with. So we are not stuck with one set of underwriting guidelines. And when I say underwriting guidelines, we're basically talking about whatever FHA, VA, Freddie Mac, and Fannie Mae allow, plus the overlays on top of that. So every lender has its own unique overlays on top of those base guidelines. The question is whose overlays are going to be the best for that particular buyer. Now with appraisals, not everybody is offering a desktop up to 97%. Some might be only going up to 90. I can tell you that Fannie Mae and Freddie Mac have both loosened up their guidelines as far as who applies or who qualifies for an appraisal waiver, which is even better than a desktop appraisal because it's instant, there's zero cost, and you don't have to worry about the value at all because it's just already built into the loan. So that's the ideal, right? And that's been happening more on purchases and refinances, which is nice. That's a silver lining of this whole virus situation. So we're seeing more of those because Fannie Mae and Freddie Mac have loosened up their restrictions for those. But with the desktop appraisals coming in low, depending on who you're using for your who your lender is, there are going to typically be processes in place to dispute that, and that might come into play with the subsequent desktop review. It could come into play with a 2055. A 2055 is just a drive-by appraisal. So if your appraisals are coming in low, make sure you know what your options are to dispute that value, especially if you feel like you have a strong argument. If you have good comps, recent sales, especially anything post-COVID that's sold, you're going to have a good argument. So make sure you and your loan officer are working well together to get your value, to argue that value if it's worth arguing.
Yeah, and it's interesting because just on the support line, the phone calls that I'm getting, I'd say about 25% of them right now have to do with the appraisal process, and the appraisal's actually coming in low. Normally, I will get one call maybe every 6 weeks on a low appraisal, and I've probably taken 4 or 5 calls in the last 7 days on lower appraisals. So yeah, I'm not quite sure, and know it's lender to lender, and oftentimes the way we're pricing homes in the spring, we're utilizing comps from the winter, and we're trying to figure out how much have values come up, and maybe we're just a little ambitious on some of our pricing. So it's interesting.
Yeah, and all this information is new, right? It's trickling in. Me hearing that from you tells me there might be some appraisers who are being more cautious with the desktop process. Yeah. Maybe they're used to going out. Maybe they don't have the confidence that they normally do on a desktop versus seeing something in person. So a lot of things coming into play. The key is obviously taking this information and using it properly. I'll be really interested. This is a tangent, but I'm interested to see when the data comes out in May, how many of those loans fell through because of the loan process in March and April.
Yeah, agreed. I'll be interested to see that as well.
Yeah, you've said it a few times, and I really respect how you say your lender, but you can hear that having a very good, tight relationship with your lender, everyone, is extremely important. And this again, back to why did I open up a mortgage company, so that you guys can have a really trusted source and someone who's on your team. And we're not over promoting the company right now because we're making sure that everything's smooth and we're doing the best job we can for everyone. But we are definitely here, and you'll see a little bit more from us. We closed 10 deals last month, so our company is doing very well. Amir's doing an amazing job. Is happy to work with some more of you guys.
And thank you guys so much for your support.
Yeah, I really appreciate it. Yeah, we've had some multiple repeat clients already, or agents using him.
So we've got.
I just want to say thank you as well, since I just want to piggyback on that. Thank you guys for those of you that have been using us.
Yeah, and Wendy said a good thing, and I kind of agree with her too. She's saying that they're seeing some more appraisals coming in low than they would expect in the springs, and haven't seen much luck in disputing them. Over my entire career, I haven't seen much luck in disputing them. Have you actually had have you ever had one of these in the recent times? And is this something that you can really dispute, or is it mainly the process? Because maybe when I've seen them come in low, they've been the regular appraisals. They go out to the house, they do all that. So are you saying maybe a desktop appraisal or a drive-by would be more easily disputed, and we'd have a better chance if that was the process versus the traditional type of an appraisal?
I will answer that with kind of a blanket yes, although it's a very nuanced, there's a lot of nuances involved there. I do think you have a little more room for argument with a desktop in a drive-by appraisal, because they're not going to be aware of a lot of things that maybe the homeowner or the agent know about with that particular house, especially if you're talking about home improvements and other things that have been happening inside the house that just aren't reflected through a desktop or a drive-by appraisal. So sometimes you can use those things and kind of support your case, especially if you have some documented evidence, depending on the appraiser, or more precisely the appraisal management company, because it's really the appraisal management company that's reaching out to the appraiser to present your argument that has kind of been gone through the game of telephone, right? The seller and the agent go to the LO. The LO presents the case to the appraisal management company, or possibly their underwriter, who then goes to the appraiser, and so on and so forth. So you want to make sure that some of those details aren't lost in translation, and documenting things like that can really come in handy, especially if you have invoices from contractors, things like that. Anything you feel that you can use, try to use it. If the appraiser's gone into the house and done a full 1004, which is a single family residential appraisal, where they've walked the house, then they're probably going to be less likely to change their value. And some of that just comes from stubbornness from appraisers, because they don't want to back down when they've actually been out there. But if you can present something to them that maybe they're not aware of, like improvements, maybe there's a comp that you feel is related, but you don't see it on the appraisal report. Those are the types of things that appraisers will pay attention to. Not always. A lot of them don't like changing value, and that's just part of the process. But if you have a strong argument, always present it. Another thing that I think is often missed in the dispute process is checking for errors. The data that's available to an appraiser isn't always accurate. So if you feel like you have the time, and a lot of times if the appraisal comes in low, you do, because it's in your interest to look, but look at that appraisal report, look at the square footage, look at lot sizes. Look at those things that have the heaviest adjustments for value and make sure that they're accurate, right? Appraisers don't have E&O insurance for no reason, right? They're human like us. They make mistakes. It's worth your time to go through that report, make sure it's got, viable comps, make sure they're accurate, and so on and so forth. Anything you can find might give you a chance.
That's good advice.
Yeah, that's really good advice. And again, just sharing, make sure your lender's willing to do this with you. Mm-hmm. Make sure that you guys have a good team and you're willing to go through the process. Sometimes people just are on to the next too easily without fighting. And sometimes you got to fight.
Take the time.
And just to piggyback on that, there are lenders right now that don't really want to do loans. And there are lenders that want to do loans. And you can kind of tell the difference in the way they communicate things, and especially the way they communicate their overlays. If they're wanting to verify employment the day of closing, and they've already re-verified it 3 days prior to closing, they're really looking for things to maybe not want to do that loan. So keep that in mind. If you're getting that feeling that the lender you've been using and your trusted lending partner, regardless of how good your loan officer is, if you get that feeling they just don't really want to do as many loans, figure out if that's across the board or if that's just specific to that lender.
Good advice. So got a couple of really good questions here. Are you seeing credit scores having to be above 700? What's going on with credit scores?
No, credit scores don't have to be above 700. Again, it depends on who your lending partner is. I think the 700 thing got a lot of publicity when Chase announced that they were basically requiring 700 FICO and 20% down and all these things to certain loan products. Keep in mind everything is loan product specific. And it's all lender specific. If we look at FHA really hasn't changed its requirements at all, which is 580. But every lender now has added their own subsequent overlays to what they will accept for an FHA loan. Same thing with Fannie Mae and Freddie Mac. They have certain overlays on employment verification and things like that, but credit score wise, they really haven't changed a whole lot. So we can do, OWN, for example, can do credit scores well below 700, depending on the type of product. But I will say one caveat to that is if you have a buyer who was already a little bit dicey as far as their qualifications go, it's going to be even more dicey now. So you have to really ask, is that something you want to try to kind of cram and push through the process? Because it could be incredibly difficult and stressful. Like I was talking about earlier, those pre-COVID contracts that were, under contract as things were happening, those were definitely the craziest deals. So that's, I think, kind of slowly getting farther and farther back in the rearview mirror, which is good because a lot of lenders, their verification of employment process and all of those things aren't as clunky as they were, and they're not kind of figuring them out on the fly. But at the same time, just be mindful of, who your buyer is. Make sure your loan officer, whoever you're working with, whoever your lender is really giving you very specific detail on the likelihood of that buyer qualifying. You don't want to try to shove somebody through that was already difficult pre-COVID. That could be kind of setting yourself up for a bad situation.
Yeah,
that makes sense.
Good advice.
Your buyer, and the seller, and so on and so forth. So
right, yeah. How about jumbo loans? We've heard there are no jumbo loans. Is that across the board no jumbo loans, or?
Yeah, the jumbo market, the non-QM market, they've taken huge hits, but there's still jumbo loans.
What is QM?
QM is qualified mortgage, right? So qualified mortgage, non-QM is any non-qualified mortgage. And qualified mortgage has to do with ability to repay rules and all the Dodd-Frank stuff that happened, 2009 and so on and so forth. And I won't elaborate on exactly all the details of those rules, but just to make it simple, non-QM would be like asset qualifier loans, where if somebody has enough assets, they don't need anything else, bank statement loans, things like that. Basically any loans that are securitized in a totally different way than Fannie Mae, Freddie Mac, FHA, and VA, right? Securitized is when the loans are packaged up into a bundle, sold as bonds, stuff like that. Those bond markets have really dried up. Those investors are not at all interested in buying these types of loans right now. So the non-QM stuff has really gone away. I do get some emails from some non-QM lenders here and there, but I'm not brave enough to sign up with any of them. The jumbo space is really going to be limited to more of your depository institutions. So depositories, we're talking about like Wells Fargo, Chase, Bank of America. Those big companies had correspondent lenders who you probably may have been used to working with that could do a correspondent loan through Chase, Wells Fargo, Bank of America. They kind of pulled that back. So Bank of America, Chase, and Wells Fargo are doing jumbo stuff really purely through their own retail channels. So if you have that jumbo buyer that wants a good rate, it's still potentially available. The question becomes, what is that turn time? And I've been hearing a lot of mixed feedback from buyers. For OWN, we really want the best thing for the buyer. So if we can't do the loan, we're going to try to give them options for somebody who can do it. And I've been getting feedback that sometimes people are on hold for like an hour and a half trying to just talk to an officer. So find out what that process length is, right? If you're going to go and reach out to one of those big retail giants, what is their turn time? What do they think a good contract length is for that jumbo buyer? I will say for us, because we are so small and nimble, we can add investors quickly. So we're actually in the process of adding an investor right now that has a really nice jumbo alternative that's going to go up to about 1.5 million at 90% loan to value. We expect to have them on board in May. So I will have more details as they come. But I wouldn't call the jumbo market dead, but it is severely reduced in who can do those deals.
And what's the jumbo loan? What's the limit? Where do you begin jumbo?
So my first post on Facebook was a little PDF with no pictures, no video, much to the chagrin of Todd, because it was not very interesting at all. But it was on the county loan limits and the changes for 2020. And I'll repost that
yes, Brandon,
after
you're
the
right.
talk. And maybe I can just dump it on here as I speak. But that talks about the countywide loan limits. And that's a really big deal right now. The best loan amount right now for most people here in the Denver metro area and surrounding counties is $510,400. And keep in mind, that's a loan amount, right? So the purchase price could be higher, anything that brings it down to that loan amount, and you're good. Now there's county limits, which go above that. For Denver, most surrounding counties, that's 575. For Boulder, 640. And there's other limits, in the mountains and stuff. Those loan limits are important as well, because they still fall under Fannie Mae and Freddie Mac county-wide conforming guidelines. But the volatility and the pricing of those loan limit ranges is totally different than anything under 510. So it's good to know those limits. If you have a good experienced loan officer, they're probably communicating this stuff to you and your buyers and explaining how those things impact the pricing of those loans.
So we'll post that again,
Awesome.
repost it, maybe make it a little
Yeah.
prettier.
Yeah, because maybe you have a buyer
Absolutely.
that's looking in the $700,000 or $800,000 price range, but they have a substantial down payment, and as long as they get their loan amount down to that loan limit, they'll be able to
Right.
press forward.
Yeah.
Okay.
Right.
It's all about the loan amount, not the
Loan
purchase
amount.
price.
Yep.
Okay,
Great.
good. I had one other
We've
one.
got a lot of great questions
Yeah,
coming
good
in.
questions.
We're trying to hit them all.
What was the, I don't know what a DPA is.
Amir, what does DPA stand for?
Down payment assistance.
Oh, okay.
down
So do
payment.
you think DPA will be available soon?
It's available now. Is
Okay.
it? What do you mean by soon?
I don't know. I just
The
had
question-
someone who
Okay,
say,
actually, I think I know. I think I know what that why that's being asked. Because I have a good friend who does a lot of down payment assistance. They stopped doing them, but there is still down payment assistance available. Requirements are changing amongst different lenders, so
do we do DPA loans? Do we have a,
Own home?
we do them through Chaffa.
Yeah, because I was
Okay.
going to say Chaff is still up and running and doing their loan. Yeah.
Yeah, unless something happened very recently that I'm not aware of.
okay.
Good.
Oh,
Well,
Jessica Ray Jones said Chaff is shut down, I've heard.
Oh, well, that's news to me. So
Sandra Shaler says it stopped for a while.
I know Teresa just wrote an offer for a buyer that was doing Chaffa down payment assistance over the weekend. So I don't know, maybe something has changed in the last 24, 48 hours?
I will look into it. I have not heard anything.
Okay.
Okay.
Usually I get an email. Yeah.
Yeah, Teresa, if you're watching this, type in the comments whether your buyer's still doing that down payment assistance through Chaffa, because I know you and I just talked about that on Saturday or Sunday.
Jessica is saying as of yesterday.
Oh, okay.
I mean, that's how
Oh, as of
quickly,
yesterday.
that's how quickly
Oh.
things are changing.
Gosh.
We
Right,
will get
yeah.
confirmation on that.
And that's why I started this conversation with any information you get now may be
Yeah,
different
anything that started at
in a couple
10
days.
o'clock?
10 o'clock
It's no
may
longer.
not be. Yeah.
Oh gosh. You know, the power of a team. We're
Yeah.
all getting information from different sources, so together we're better.
So your crystal ball, Amir,
Yes.
interest rates in the coming months.
So we feel that rates are going to continue to trickle down. Rates are one of the nice positive sides to this. So if you do qualify, you're probably going to get a really good rate. There's a few things built into rates right now that are still keeping them a little bit higher than we think they should technically be. One of that is the service valuing piece to rates, and the service valuing premium is basically something that's built into mortgage rates that is a premium that a mortgage servicer will collect. And I don't know if you can hear my 5-month-old crying in the background.
Aww.
If you can, I apologize, but that's part of the new world, right? With the kids at home. But as servicers get a better idea of what's going to happen with these forbearance plans, how they're going to be effective, whether the government is going to offer some more liquidity in the servicing field, that's going to answer some questions that is going to start to shrink that premium, which right now is built into mortgage rates. And there's also just a lot of uncertainty with how long everything's going to last. So we feel that rates will trickle down. You never know, but we feel there's enough built in currently that rates will stay pretty low throughout the year.
Good.
Good to know.
Yeah.
So let's see here. That's maybe a Stacy question. So if we're working with a seller and getting ready to list a $1.5 million home, should that jumbo loan conversation come into play for pricing? Meaning less people can get a jumbo loan. So if sellers motivated, should they consider lowering the price? I mean, so that's a pricing strategy thing.
Mm-hmm.
And I guess I would say, yes, that would be taken in consideration that if people can't purchase homes, you're definitely going to lower the
Demographic.
the buying pool. Now, whether or not that's going to affect home prices right now, that's yet to be seen, because again, we've had such a pent up demand, even in the higher price ranges, that when things loosen up a little bit more, that may or may not affect them. I mean, a lot of people in that $1.5 million home actually have liquidity, and they're not always looking, just because it's an expensive home, they're not necessarily looking to take out that big of a loan. Sometimes that person in that $700,000 or $800,000 range might be more affected than someone in a $1.5 million range. So I think right now,
I don't think there's anything that I'm seeing, of course, in the rearview mirror yet, or forecasting that is going to require that we modify pricing quite yet.
not quite yet.
Not quite yet.
But that's something you stay on top of and watch the market and what's going on. What might affect that $1.5 million buyer might be more crude oil prices. That industry is getting really crushed right now, and maybe they're highly invested. That might be more of a deterrent to that type of a buyer than a loan amount. They're more affected.
Their investments.
Yeah. So again, it's so early to know. You just got to stay on top of the market and watch very closely.
But yeah, great question, Beth.
So this was really good. Teresa said that she hasn't heard anything on
About
her
the
Jaffa. So her deal was going through, and it's still going through. Maybe her deal was going through and it's going to finish out, but they're not taking on new Jaffa. Again, Amir will get back to us and we'll find out. I think he's even looking right now while we're talking.
Yeah, I am looking at it actually because I'm very curious.
Yeah, Pat Wenzel, you're exactly right. A lot of $1 million homes were purchased with cash. That's very true. So at this point in time, I am not seeing pricing strategies having to lower prices. Again, we've just had such a pent-up demand.
Yep.
Have I missed anybody else's here? I think we're getting quite a few people answered your questions. Kim Dunbar, are you finding RPRs to still be pretty accurate?
Honestly, I haven't even been on RPR in the last 3 weeks. So I don't know. I still feel like I go to RPR and I'll actually go to Zillow and do a Zestimate. And I look at that. I look at RPR, I look at Zillow, I look at the county assessors and their AVAT.
I forget what that's
assessment
called.
of value. Yeah. Anyways, their value. And I kind of use that as a baseline to get a nice parameter of what I should be looking for when I go into the MLS and pull comps. So I don't necessarily always use the RPR value to set my sales price, but I use it so that when I go into the MLS, if there's something that's extremely high or something that's extremely low, I know those are the anomalies and to throw those comps out and really focus in on a certain range. So I don't know if that helps answer the question.
Yeah, I'm not sure if you watched our CMA class. We do have the CMA class on YouTube where we really break down all the tools that we use to come to pricing, and it's definitely not desktop CMAs. That's where you start, but you need a lot more information to really determine.
And sometimes RPR, when you look at the recent solds, you can pull up a sold house in a neighborhood and see what the RPR was, and it could be off by 30 grand. So some of them are spot on, some of them are off. It just really, really depends. Again, there's all these algorithms building these estimates, and they're not always 100% accurate. So. Anything else that we've missed or overlooked? I think we've gotten the majority.
I think we've got a majority of the questions that require additional. Yeah. Again, we'll get information on that Jaffa thing. Could we see conversation?
Yeah, I don't see anything. And one thing that's important to keep in mind is, sometimes the lender will say we're no longer going to work with Jaffa.
That's what I was going to say. It may be the lender.
That's a little bit different than Jaffa actually stopping and not offering their down payment assistance programs. So make sure that that's, the information that you're getting, make sure you're following it all the way to the source. That's not to say that that's not true, but I just don't see anything right now. I'd love if somebody had a link to a news story or PDF or some kind of confirmation. And I will reach out to them anyway, but I don't see anything. So just make sure it's not a lender saying we don't do Jaffa loans anymore, because that's happening all over the place. Versus Jaffa actually not offering it.
So if someone had a buyer that needed down payment assistance and the current lender that they were working with says we're no longer doing the CHAFA loans, that's something that you or OWN actually is capable of offering.
As far as I know.
Okay. All right.
I want to
Fair
verify that. But,
So yeah, we'll have Amir get back to us on Facebook today, do some posts about
Thank you.
the jumbo pricing, and then CHAFA. Also, just to recap, I had some questions about, okay, is the office open again? So if you didn't watch the beginning of this and you're still live with us, yes, our office will be reopened. I don't even think
On
Paul was
Monday.
back on yet. So Paul, you're going back to work.
Yep.
And Parker, so you guys can go back to the office, work in the office. We will not be doing any classes. We will not be doing any meetings. No more than 5 people in the office at any one time. We'll post this all on the door. So if you want to schedule a conference, you need to go through Elevate. You can schedule a conference room if you have a meeting with a client. But we can't have more than 5 people in that office at any one time. What else?
Yeah, and then we'll just kind of wait as we get more information from the governor as to when things are changing and rolling out for full not closures, but
When we're totally back to
when
normal.
we're totally back to normal. But until then, just start showings on Monday.
Yep.
Office is open on Monday, and
If you need a lockbox, you need a sign, please call first.
Yes,
so that
please.
you know that Paul's not in a meeting. Again, if he's with somebody already, we can't take care of you. So if you have we'll post it, but it's kind of common sense. If you have a fever, if you have a cough, if you're sneeze, do not come into the office. Wear your mask when you're out and about.
Technically, businesses right now, under the new safe-at-home order that's going into effect next week, you're actually supposed to take the temperature of people that are walking into office spaces and making sure that they aren't sick. And so, please.
We don't have that big of an
cautious.
office, that we need to be checking you guys' temperatures, but self-check, don't come in. If you do come in, wear a mask. Paul and Parker will not be sitting in the office wearing a mask, though. When you're there with them, social distance. I think that's it.
So we have one more announcement, but you can go ahead and finish wrapping up.
Oh,
with
we do
Amir.
have, So Amir, how do we reach you? If someone has a question for you, how do we get in touch? What's your phone? And what's your phone number?
303-570-4961. That's my cell phone.
Okay.
You can text if you'd like. Calling me is the best, because there's a lot of details that are incredibly important to every piece of the process right now, and that's best communicated through a phone call. But phone's the best. You can of course text me. You can email me, Amir at ownhomeloans.com.
How do you spell own home?
Own is O, H is in Henry, N is in Nancy. Homeloansplural.com.
And again, we'll post this on Facebook.
Awesome.
Yes.
So
And,
Thank you, Amir. This has been very
available
helpful.
pretty much anytime. So
No, you're doing an awesome job, wonderful job. Really proud of what we're doing and helping people out. So thank you so much.
Yeah, and I do want to answer one other question Sandra Shaler just asked regarding showings. If we can, let me actually look at the question full. Do we know if there are any restrictions on showings? Can we only take one person in the property at a time? So yesterday during the press conference, POLIS specifically said one-on-one showings can resume again on Monday. So what's your interpretation of one-on-one showings? He didn't say a blanket statement of showings can, but it did say real estate showings in the PDF. So please don't take groups of 10 through the property. If it's a husband and a wife and 5 kids, see if they can leave their kiddos at home. Just take the decision makers to the property. I think that's the best business practice.
Yeah, because again,
Well,
if a neighbor sees you hauling in a family and
And friends
and kids, and they see people sniffling and coughing and going through, it's not good.
So try and keep it one-on-one, but if it is, the 3 of you walking through the property or,
and be wearing your masks and be social distancing. Don't drive them in the same car. Drive
Nope.
separate cars right now.
Yeah,
So,
ask them to wait in the vehicle while you unlock the door so they're not, breathing on you as you're doing your lockbox. And so, yeah, open the door, let them walk through. I hope that answers that question. So,
Yeah.
All right.
Did you say we had another announcement?
Yes, your special announcement.
I think we need to do a whole
We'll
different...
Yeah.
Yeah.
I told
But you already
people
said
to
it.
wait till the end.
We'll do
Just
a new... We'll do
a
quick...
quick announcement, and then
Yeah.
we'll elaborate on it.
Okay, so last year we had a special course for our top agents. It was a master class course, and it had to do with... Where are we going? It had to do with really taking your life and yourself to a whole new level. It was taught by Brian Johnson, and then we facilitated it. It went over how to have a masterpiece day, how to really work on your daily habits, how to really just how to be the best version of yourself. It was an amazing course, and I only offered it to our top agents. It was a very small group, and it was very intimate. And while I was teaching this, and we did this for about a year, and so many people just raved about it who were doing it, and it totally changed their lives. I mean, Marcel Savoy lost like 60 pounds because he just changed the way his diet was, and we'll have a class on diet and eating. But everyone took something different, whether it was a new habit they wanted to create, or be better as a husband or a wife, or a parent, be better in their industry, be a better athlete. I mean, it just really broke down so many different
And it's not
things.
real estate specific.
No, this has
is
nothing to
not,
do with real estate.
This is life,
This
and
is
creating new rituals and routines throughout your morning and throughout your evening to, I don't know, really ground you, center you, help improve you and your family.
Yeah, Stacy and I have been working on this for about 3 years with Brian Johnson, and it's just been amazing for us. And again, it was amazing for the people in the class. And during the class, I was like, geez, maybe I should be offering this to everyone. And we kind of liked the intimacy, though. But during these times, I think so many of us have sat at home going, what is this all about? Who am I? What's important to me? And so we're going to reintroduce this course. We're going to pick out 6 of our favorite topics out of this whole thing. It's going to be every other week. It'll be on Zoom, so you can stay home still. We're not getting together. We'll watch it. We'll watch Brian Johnson. He does a great presentation. We'll send handouts via PDF, and then we'll have a group discussion about it, because this is really, it's amazing stuff. It just really gets you thinking and helps develop you as a better person, I think. So
Yeah.
more
So,
information to come, but we'll
be
start
launching
this
that next week, or next month, excuse me.
next month. Yeah, we're going to wrap up the Buffini class. We've got one more class there. We can only take on so much at the same time. So once that Buffini class is wrapped up, then we'll get you guys all invited. And
Yeah, we'll give
so,
you the
yeah.
6 dates, the 6 topics, and we'll rock and roll. So we're super excited about it.
Yeah, it'll be awesome. So anyway, just confirmed with the Aurora County Traffic Class Secretary, they are available. So we're going
Awesome,
all over the
Aluz.
place.
Thank you.
We will have it come from Amir, though, just to confirm that we can do them as well. So awesome. Thanks so much, everybody. Have a wonderful
Have a great
week.
Tuesday.
And go show some homes next week.
Next week.
That's just, yay.
Awesome. We're here if you need us.
Take care. See you guys. Thanks, Amir.
Thanks, Amir.
Welcome. Thanks for having me.
All right. See
Have
you,
a
buddy.
great week.